we will see you again shortly. Good stuff. Michael Lee is with us. The perennially bullish Michael Lee, who is still bullish, by the way. But let me move to a separate subject here. Give me the best way to hedge against inflation.
Well, it's to own financial assets, and in my opinion, the best hedge right now is to own stocks. People can make the argument for real estate or gold or Bitcoin. I believe the stock market is the best hedge that you're going to get right now. I think the number one reason you own stocks in the long run is a hedge against inflation. And so because we have not seen that much inflation for the last decade or two, I think that's coming home to roost a little bit right now. But when you look at the stock market, not only do you have this inflation push, you also have earnings that are far above consensus. And the biggest companies that drive the major indices are really just hitting the cover off the ball. I don't think that's likely to change anytime in the next 6 to 18 months.
Well, you're right about hitting the cover off the ball. I mean, we've just gone straight up. My problem with using stocks as an inflation hedge is that sooner or later, the Federal Reserve really does have to get a handle on inflation. And when it does that, the market will probably sell off quite dramatically. That's my problem with putting money into stocks as an inflation hedge. How do you respond to that?
Yeah, look, the Fed is clearly behind the eight ball. On inflation. I think they thought, like me, that situations like the Port of LA would be solved right now. They're not. And so I think the driving of inflation, yes, you've had a tremendous amount of fiscal stimulus. You've had a tremendous amount of monetary stimulus. But once these supply chains heal, I'd imagine prices will at a certain point level off. And I don't know that we're going to see the supply gluts that I previously thought we're going to see, but I do see inflation leveling off at some point, hopefully in the next 12 months. The key difference for stocks right now is the $4.5 trillion on the sideline. So that's, if inflation stays at 6%, that $4.5 trillion will be worth 6% less next year, and you're going to create a FOMO, or fear of missing out, reaction with a lot of that cash that should push stocks up another level, combined with some great earnings and an expanding economy, albeit at a slower rate.
One of these days, Michael, you're going to tell me to sell, but I don't expect it to come anytime soon. But I'm waiting for that day, and I'll come straight to you when I hear that you're no longer bullish Michael Lee. Great to have you on the show today. We'll see you again real soon.
Thanks,
Mr. Lee. Thank you very much.